Being an ambitious individual is the key for an understanding of the monetary system and how it operates today. Throughout history, debt has been the driving force behind government promises, but yet since 1913 to the present day, the division between the rich and the poor has grown further and further apart. But why? This is the result of government and the monetary system getting too involved in our lives. By promises, and you guessed it, more promises, and at the same time, having individuals believe in the government system that is in place today. But here's what you need to know to get a better understanding of how the government and the monetary system get away with the belief of infinite economic growth by stealing your purchasing power, along with your freedom without you even knowing. When a government needs a loan to pay for a bureaucracy, they issue a bond, offering an interest rate on top of the listed price of the bond. But the real question is, who buys these bonds? Well, you do, but who do you buy them from? The banks. When you place investments at a bank, they offer a return on your investment. How can the bank offer a return? Here is a simplified version of what they do. They buy bonds in large quantity from the government. Banks are allowed to use these bonds as an asset on their balance sheet. By doing this, they're then allowed to lend you more money. But the real question is, how? The answer is fractional reserve banking. This requires a bank a small amount of capital for a bank to issue a loan. If I'm a bank and you need a $10,000 loan, according to the new BASEL Accord 3 rules, I would only need to have $600 in my vault to give that loan. This is a 6% capital requirement, change from the 3.5% capital requirement leading up to the 2008 financial crisis. But the real question is, where does the bank get that $600 from? They get it from government bonds. When this happens, the money is created out of thin air through the bank's ability to buy fiat currency backed by nothing, printed by the Federal Reserve. One last question to ask. The bank's lending practices have only changed 2.5% since 2008. How long will the spiral of out-of-control government debt last until the inevitable economic collapse of society?